Welcome to that Wall Street Tribe. So glad to introduce you today, Mr. Ken Gee. Ken, thanks for being here.
Thanks so much for having me. Glad to be here, man.
Man, this is take number 3, Tribe. Just so you know, podcasts don't go as easy as you want them to be. Thank you, Ken, for being such a great guest. I do want to know, though, and as our audience starts to listen to you, you have an amazing experience in the multifamily space. And today they're going to learn how to do that well. But you weren't originally in that. You were a tax professional working at Deloitte. Tell me why you left that career after 7 years to jump into this.
Yeah, that's a great question. So rewind the clock like 25 years or so. And I was feeding my daughter in the middle of the night. My daughter was young. My whole family was young. And I used to do her 3 a.m. feeding. Why? Because I was working 70, 80 hours a week at Deloitte. And that was the best time I could find to spend with her. So my wife was sleeping. My son was sleeping. Just imagine 3 a.m. If you're a father, there's nothing like that father-daughter bond. What happened though, I enjoyed it night after night until I realized, wait a minute, you idiot. This is 3 a.m. and this is the best time you can do for your daughter. And that just bothered me. That wasn't cool. And I realized that I had done everything I was supposed to do, got good grades, went to school, got a good job. And now my whole family was going to grow up without me because I was too busy working. And that just wasn't cool with me. So remember, I had spent a lot of time at Deloitte. The Cleveland practice at Deloitte had a huge, huge real estate practice. And previous to that, I was a commercial lender for 5 years and had a lot of real estate clients. So I'm like, man, there's a lot of people doing well in real estate. I need to figure this thing out. And that's what I did. So I decided it took me like a year and a half to figure it out. It wasn't easy back then. There were no podcasts like this. So I went to apartment association meetings and bought Carlton sheets, no down payment system, anything I could find. There wasn't much out there. And I ended up buying 3 small apartment buildings, like a 28 unit. That was my first. And then a 24 unit and a 22 unit. Sold them 3 years later, made $500,000. Like that was on the side while I was still at Deloitte. And this is ridiculous. So obviously, if you're able to do that well with something on the side, man, imagine if I just committed to this full time. And so that's why I switched.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
First of all, amazing that you took that leap and you started putting into play these specific assets and all that. But I want to back up really one more second. When you said something had to change, like what was the vision that you were trying to go after? Like, I mean, from 3 a.m. feeding with your daughter to like, hey, this doesn't work for me, to what was the end result you wanted to have by taking those steps you took?
Yeah, what was really important to me, and look, Deloitte was a wonderful place to work, but what I really wanted was control of my life. I wanted to be in charge of whether I did well, whether I didn't, right? When you're at a firm like Deloitte, and again, there's nothing wrong with Deloitte. It's a fantastic place to work. But I mean, when you're in that environment, you do what your client says, when your client says, for however long your client says. You just have no control. And I just didn't want that. I wanted control over my life. And I had seen so many real estate people making a hell of a lot more money than I was making at the time. So those were the two real drivers that made me move toward real estate.
Why multifamily? Like most people, it seems like they start off with the single houses, the single green houses, right? Before they start getting the red hotels or multifamily. Yeah. Why right out of the gate?
Yeah, that's a good question. And so I'm a pretty analytical guy. So I spent a year and a half trying to figure this out. So I was still working at Deloitte, remember, working a lot. And I thought, okay, what about single family homes? Well, or doubles or triples, whatever. Every time I looked at something, I couldn't figure out how to make money on it. It seemed like people that were buying those things wanted to live in a half of it and have somebody else help and pay the mortgage. But that wasn't profitable, right? It didn't feel profitable to me. And even if I could find one where I could maybe eke out $100 a month or something, I was just scared. I'm like, well, what if the roof goes bad? Like, there goes all my profit and then some, right? So I didn't like that. I also didn't like the fact that I wouldn't have enough money to pay people to do things. I wouldn't have enough money to call a maintenance guy, call a plumber, an electrician, because there's just not enough income there. So that's what led me to a larger property. And then I continued to think this through. I'm like, well, wait a minute, Ken. First of all, you don't know how to fix anything. So there's no chance that you can fix anything. And two, there's no chance you can eke more time out of your day. So I had to buy something that was big enough that I could run it like a quote unquote business. And 28 units felt like a business to me. And as it turned out, I hired this lady. Her name was Joyce, amazing lady. She lived at the property. She got a rent credit, and she took care of leasing for me. She took care of collecting rent. She took care of making sure the maintenance was done, all that kind of stuff. So it was the ability for me to run that thing like a business that made me go to that level, because there was no way I was going to take more time out of my day to go fix a leaky toilet or something.
Did you have that question in the back of your brain, though, that says, man, what if, though, right? Like, one unit, I get that. I get that you're saying, hey, that I'm not going to make enough money with this thing. But the opposite is out there, too, is what happens if I don't know what to do, right? I am a corporate accountant anyway. I'm not a professional investor at this point. Right. What happens if this business that I'm trying to spin up doesn't work out? And now I've got 28 units that are going the opposite way against me. How did you answer that question?
That's a harder question to answer, because I will tell you that I pressed forward. Look, let's face it, I risked everything, because back then my first mortgage on my first apartment building was $460,000. Remember, this was a long time ago. I had to sign personally on it. If that property didn't work out, I mean, I was toast. There's no way I was going to pay back $460,000 any other way. So it created a very, very stressful environment for me. I remember, working on that deal, trying to get that deal closed. This has never happened to me since, but I felt like I had a golf ball in my throat. That's the level of stress that I had. And I thought, man, am I sick? Like, what's going on? And somebody I don't remember what it was. They said, no, you're just really stressed out. Okay, this will probably go away. And I remember after I closed, it did go away. So yeah, was it scary? Was it risky? Yeah, it was. But I guess anybody that makes changes in their life, I mean, you just got to find the courage to push through it and do it, and just know that I'm not going to let this fail. Right? That was my attitude. I am not going to let this fail. I know a little bit about lending. I know a little bit about credit because I'd worked at the bank. I know a little bit about numbers because I'd been a CPA. So I just have to figure this out and go do it. And I also felt like all the other people that I knew had made money in real estate, I didn't feel like they weren't like super amazing, special people that were unicorns, right? They just seemed like normal people. And I thought, well, why? I should be able to do this. So that's what happened. It was stressful, though.
I hear, first of all, in this interview so far, Russ, and I'll just throw this out. One, you committed to making a change.
Oh, yeah.
Right? The alternative of continuing to do what you've always done and having some sort of different result, you knew was impossible. Like, that you can't have the life that you want and continue to do what you're doing. Number two, you committed and persevered and said, I'm going to make this work. I've done enough due diligence on the front end to know that this is a business that can work. And now it's just a matter of, I got to make it work. I'm going to keep my foot on the pedal and make it happen. Now talk about the steps that you took, maybe imperfectly, that then you've already kind of let the cat out of the bag. You made $500,000 within a few years. It couldn't have been all bad, but was there anything along those next steps that you were like, oof, that was crazy?
Oh yeah, there were a lot of mistakes, just a lot. So the first thing I did, though, I want to talk about something that helped me get through that process was I found this attorney who had owned 4,000 units, I think. I don't remember now, but it was a lot of units. And I thought, you know what? I was looking for validation, and I thought, man, if I hire this attorney to be my attorney, he has all this real estate experience. He would hopefully tell me, no, you don't want this deal, or, you do okay, right? That I was looking for some sort of validation from somebody who knew what he was doing. And I got it. I paid him $3,000. Remember, that's a lot of money back then. Still is, but that even more then. And he said, Ken, I see this deal. I know the seller. I know the area. I think you're going to make $100,000 over 3 years, in 3 to 5 years. I'm like, oh my God, that's unbelievable. So that's the first thing I did. I needed validation. Fast forward today, most people do that with coaches or mentors or things like that. But that's what I did. Now, I mean, I don't know if we have enough time to talk about all the mistakes that I made, but I'll tell you the biggest one that I made. And this is just embarrassing to say out loud. But so when I bought this property, I didn't, I just thought you're going to buy property and it'll appreciate over time. I didn't fully, even though I was a CPA, I didn't understand how, I didn't understand why, I didn't understand how to force appreciation. And so I remember shortly after I bought the property, my Joy, she would lease, take a leasing application. I would run the credit, horrible credit, evictions. The rent was $415 a month, and that included heat in Cleveland. I mean, that's pretty low. And I remember thinking to myself, holy crap, what did I do? Because now all the apps that she was sending me, they all sucked. No good credit. No, I'm like, oh man, how the hell am I going to find a good person to live here? And I don't remember how I met this woman named Karen. She worked at the time for the Shaker Heights. This is the name of this agency. It just blows my mind. It's the Shaker Heights Pro Integrative Housing Service. And I don't remember how she found me, but she found me or I found her. I don't remember. And she said, Ken, let's meet at your property and let's take a look and see what's going on. Because I explained to her my problem and I was worried. And she walks around and she says, Ken, look, the building's built in the 1930s. Your kitchens are from the 1930s. She's like, dude, you got to upgrade this. I said, Karen, you don't understand. I borrowed the money that was my half of the down payment. My in-laws gave me, were my partners and gave us the other half. How am I going to upgrade? I don't have any money left, right? And she says, well, listen, I'm telling you, if you build it, they will come. I said, well, how much do you think I have to spend? I mean, I told you this is embarrassing. And she says, about $5,000 to fix up this unit. I said, are you crazy? Like, are you nuts? I said, I don't have that kind of money. She's like, hey, well, look, I'm just telling you what you need to do. It's your property, not mine. So I said, all right. I stressed out about that. So I said, all right, I put $5,000 on my credit card. What the hell? I already had a lot of debt. What's another $5,000? Renovated the kitchen, and I renovated the kitchen, refinished the floors. They're all hardwood floors. It was a beautiful apartment when I was done, or when the guy was done. I didn't do it. We rented that apartment for $599, and it was a Case Western Reserve grad student that leased it. So I thought, oh, this is unbelievable. I just learned now, looking back, that's called value add investing. I learned it without realizing that that's what it was. So $415 to $599, that's almost $200. In Cleveland, that's like unheard of. So I employed that same process for more of this building. The next building that I bought, that 24 unit, I started talking to more and more people, and they said, well, Ken, what you need to do is have the lender help you fund the improvements. I'm like, oh my gosh, this is like light bulbs going off everywhere. I thought, this is brilliant. So now I would renovate the unit. I would lease the unit. The lender would come and look at the unit to make sure I did the work. I'd have to show them the lease. They would reimburse me for what I spent, right? So you can think about this. To this day, we use value add, right? In some way, shape, or form, whether it's physical or management improvements. But that's how I learned what value add was. It is very embarrassing to tell you that I didn't figure it out until after I bought the thing. But I mean, that concept was responsible for millions of dollars of profits. And I owe it all to an incredible lady named Karen.
Well, it's clearly that one skill significantly solidified your space there, right?
Oh yeah,
and gave you that additional value add that now added probably to that 500,000 or whatever the number was you said.
Well, that's how I made the $500,000. Yeah, I mean by doing that over and over, right?
Yeah,
and most people don't give Karen any credit. They always they always bash Karen. So
they were smart. Yeah, they were the smart ones. They didn't. Yeah, no, that told you it was an embarrassing story. I'm not going to embellish it. I mean, I owe everything to Karen. Unfortunately, I don't think she's around anymore, but
Yeah, there's plenty of Karens out there. Maybe not this one. So let's talk about do you think though, like as I listen to this, because we've had, I don't know how many people that are in the multifamily space and one, most of the people that come on our show in the multifamily space, they're mostly syndicators, right? They're just raising money to their own deals. They maybe coach some people around it. You've been doing it for 25 years. Like you've had a lot of understanding of that market. You've gone through multiple down cycles.
yes.
Is that market drastically different today than it was 25 years ago, or really not that different? Just with the multifamily market. Like, I mean, I know the zeros are bigger.
Yeah.
But outside of that, are we really still dealing with the same stuff, or has things changed significantly? And if so, how?
Yeah. So, the properties themselves has changed. What people want has changed. Now, remember, first 10 years of my career were in Cleveland, and most of the stock in Cleveland is older, and it was a lot different experience. 15 years ago, I said, you know what, if we are making so much money in Cleveland, imagine if we went to a market where people actually wanted to live. I mean, imagine what we could do there, right? It took me a long time to actually get some traction there, but that's when I noticed the biggest change. When you went from a market that is generally not growing and maybe declining a little bit in terms of population to a market that is exploding, with Florida has had steady growth for a very, very long time. Suddenly now we have, instead of demand supply not in my favor, it became in my favor. And I got to see the transition as you grow up in this business, you generally continue to improve the asset quality of the deals that you buy. And so I don't know if the world has necessarily changed, although I think it has. Now, higher quality assets, I mean, people that we rent to, they want to be mobile. They don't want to be tied down to mowing the lawn and painting the picket fence and all that stuff that we really, really wanted, right? We dreamt all that. They don't want that. So now they're building, as you know, these apartment buildings with insane amenities. I mean, you couldn't put all these amenities in a single family home. So now they have this, no baggage life, resort-like amenities. And that's the biggest way that this world has changed. The other thing that's changed about it is the number of people getting into the business. That has clearly exploded, because when guys like me, you multiply me times 1,000, people talk, right? Oh my gosh, I made all this money. Oh my gosh, I made all this money. And well, I got to go do that, right? Everybody wants to get in on it. So this thing is, the number of people doing what we do is kind of exploded. Unfortunately, probably a little too fast, but that's the other change, because back then there wasn't that many people doing this, because, the only people out there teaching it was Carlton Sheets. Now there's, everybody's trying to teach it.
There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
What would you say is the biggest downside to that, in your opinion? What do you see in terms of the landscape of other people in the space? How are they missing it?
Yeah, what the biggest frustration I have, and it's why we created the entire education side of our business, it's because people were getting into this business without having, remember, I didn't have a clue back in 1997 when I started, but these people are moving too far, too fast. They're taking other people's money, and they don't really know what they're doing. They're trying, right? Their heart's in the right place, but it gets really dangerous when, like what's happened recently, right? People didn't know how to manage debt. Well, 2008 taught me how to manage debt, and I learned at the bank. But when you go through 2008, you understand how important debt is and how important it is to make sure you manage your debt maturities and you're not taking on variable rates. And so people are piling in, not really getting into the details of the business, because they were taught, hey, you be the investor, you go hire a third-party manager, they'll be everywhere. You go, put a little bit of your own money and get everybody else to do that. You'll make a lot of fees and all this stuff. They're coming into this business without really understanding the business that we're in. And that's why we do the education side of what we do, because I take them into the weeds. All that stuff I didn't know in 1997, I want you to know now, Because if you don't, I mean, the brokers are even more unscrupulous than they were back then. If they know that you don't have a clue, I mean, look, their job's to represent the seller. They're not here to watch out for you. And people just do some really, they make some big mistakes.
Let's break that down a little bit, because I would love to know what, if you're saying, hey, I'm going to dial up the very best candidate who's leaving corporate America, doing some other career, and they're seeing the light bulbs like you did. They're saying, I want to get into multifamily investing. And you said, do this before you buy your first unit. Do this, take this length of time. Like, what is the ideal scenario to set someone up for success? Maybe you could walk us through an example or something, but I just want to better understand what that looks like.
Yeah. I mean, this is exactly our entire program. So the first thing you got to do is you got to understand the numbers. You just do. We have the first phase of our program is about underwriting, and it's detailed underwriting. Like, if you don't know what pest control should cost, you should pick up the phone and call the pest control company and say, how much are you going to charge me, right? I mean, that level of detail. You got to learn the business if you're going to ask someone else to give you money. So that's the first step. Because what happens once you see the numbers, understand the numbers, everything changes for you. Your confidence goes up because you're a lot smarter. You know that you know what's going on now. Brokers can no longer take advantage of you. You know, if the broker wants you to come up and price, you're like, no, I can't. I can't even pay the mortgage if I do that, right? You just know. Then the next thing you have to do is you have to take a hard look at yourself, because so many people are out, somebody told them, hey, go big or go bigger, right? Well, okay, their first deal is not going to be a 300 unit, $75 million deal. That's just not how it works. You're never going to get it. So what I try to do is I want you to look at your situation and figure out what's the right business plan for you that'll actually get you your first deal. Because no broker is going to take you seriously on a 300 deal. The only thing they're going to do is use you against the real buyer. So if maybe based on your financial situation and your location and all the stuff that we help you figure out about yourself, maybe you should be in a 30-unit property as your first property. Well, when you call the broker that's selling a 30-unit property and tell him, hey, this is my first deal, he's not surprised. Right? People start off in 25, 30 units all the time. So now that broker will take you seriously. You have the ability to get that closed. And then what we do, now we're just going through the transaction cycle is the way we teach it. So the next thing after that is we're going to show you all the things that you need to do to be prepared. We help people write their bios, because people just struggle with that. They have to do their personal financial statement so they understand that, because they're going to need it later. And so we go through all these things with we do a personal SWOT analysis, because most people don't have all the skills that you need out of the gate to do this business. So let's figure out what your strengths are, what your weaknesses are, and then let's fill the weaknesses, right? A long time ago, I didn't really know. On my fourth building, I finally said, man, I need some help here. I was missing a lot of things, and I said, man, I need to find this person that will help me. I ended up eventually finding that person. He filled all the gaps for me, and I filled in a gap for him, and that was he didn't want to do any of the work. And I said, I'll be happy to do all the work, right? So we go through the SWOT analysis, and we get you set up so that you can start forming the relationships with the people that you need to get this done. Then we get into the deals. Mm-hmm.
Yeah. Do you feel like someone can do this on the side, like the way you did it when you first started? And also, what if someone doesn't have strengths? I mean, I'm just asking for a friend over there. Like, are you able to fill in the strengths too? I know you were talking about filling in the weaknesses, but if you have to substitute for the strengths, just talk to Joey specifically.
Talking about Joey, is that what you're trying to get me to do? So look, hey, I'm going to take you back to 1997. I had no money. I had very little credit. I had no net worth. I had obviously no clue what the hell I was doing, no experience. But the strength I had was I had this desire to do it. I would do the work. I wasn't afraid to do the work, and I wanted to legitimately learn. Well, I don't have very many strengths there, right? I'm pretty sure Joey's at least got that, all right? I'm sure he does. So now I just had to go find that person to fill out. That's a lot of gaps. You agree? I mean, that's a lot. I mean, so I found this attorney. His name's Gary. I won't use his last name. He's now retired. We're still in a deal together. But he said, hey, you know what, Ken? We got to, develop a relationship. We met for lunch repeatedly, so on and so forth. And he said, Ken, I don't want to do the work because I'm a successful attorney, but I own 1,000 units. I have experience. I have money. I have liquidity. He goes, let's do this because I think we can make a lot of money together. Can you do all the work? You got to put in a little bit of the money because I can't let you off scot-free. He says, I'll do most of the money. We'll split 50-50. Millions and millions of dollars later, he's now retired, but it gave me that ability to now really start to scale and grow and make meaningful money, right? So even if Joey, all he does is has the ability to do work, he can solve this problem. Now, what most people do is they see that, or like, I don't have this, I don't have that, I don't have this. There's no way I could buy an apartment building. I'm just giving up and I'm going to go home. But that's not how I approached it because I really, really wanted to do this. I said, these are just problems. I got to figure out how to solve them. I'm going to solve them somehow, some way. As you're going through the process, it's really stressful and you're thinking, am I ever going to be able to solve this problem? But yeah, you will. I know that now because I watch a lot of people do it and I help a lot of people do it. But I solved those problems. That's how I got in, right? So even if Joey has no skills other than he's willing to work hard, he'll find us. So it's good news. There's hope for you, Joey.
About that whole wanting or desiring to work hard, we may have to have a different podcast about that. I'm still working on that desire. But Ken, talk to me about like a real life example. Somebody that has, we understand that you did it, that you made this happen from those 3 a.m. feedings to today. But talk about one of your students. Like, what was the scenario when they met you? What did they do? What's been kind of their progression? And just kind of lay that out for us.
Yeah. So let's talk about a 25-year-old guy. His name's Gabe. I got to know him through a couple of, events that I had gone to, and we just developed a relationship. And he said, Ken, I'd really like to be your partner. I said, yeah, cool. Yeah. Okay. And then, he just kept at it, right? He kept coming back. He's like, let's go to lunch. Let's do this. Let's do that. And then this is the funniest story, but I was kind of managing a deal in Daytona. Our company managed it, but we didn't. The owners really managed it. We just did the books. And he said, Ken, look, I've underwrote it just like you taught me to do. I'm telling you, this is a deal we should do. And I blew him off. I'm like, no, it's only 55 units. I don't know. He's like, no. And he said, Ken, I visited all the rent comps. I'm telling you, there's a bunch of upside here. Come on, man. Let's look at, he was like a dog with a bone. And I thought, you know what? I love this guy's work ethic, right? And he underwrote the same way we taught him to underwrite. He was doing things. He was not afraid to go visit the rent surveys or do the rent surveys and visit these comps. Nobody wants to do that kind of work. So I said, all right, here's what I'm going to do, Gabe. I said, let's do a joint venture because now we do funds. I won't get into that. It's a whole nother podcast maybe, but I said, I can't just let you into my fund and give you half of the profits or something crazy like that. So let's do this. You want to learn this business. You go do your own private placement memorandum, your own operating agreement. You go find your own investors and you do your thing. But Gabe, guess what? If you fail miserably, I have enough money in my fund to close the deal without you. Okay. So whatever you raise, I said, you can't control the deal. I don't remember how much capital we needed, but I said, you can't control the deal because my fund investors wouldn't allow that. I said, so just go at it. And he's like, oh man, this is cool. He thought he was going to raise $3-4 million to his credit. He was a humble guy. And he said, I think he came in at like 900,000, right? He's like, man, this is hard. I said, yeah, I know it is. But he got $900,000. So he got about, I don't remember, it's like 20, maybe 20% of the deal. I said, whatever you raise, that percentage of the deal that you'll get. And Gabe, I just need you. I need you to do the due diligence. I need you to do the unit walks. I need you to, whenever we need you, to go there and do things. He said, I'm on it. So that was the first deal. So fast forward now a little while later, he comes to me and he says, Ken, I found this other deal. This is 102 units and it's brand new. I said, oh, okay. I wonder how I missed that, but it was in St. Petersburg, Florida. He's like, Ken, I've been to this thing. I'm telling you. He goes, I can't do it by myself, but I think that we should do this together. Now I'm starting to listen to this guy because he's out there pounding the pavement. He's trying to find deals. So I visit the deal. It is a brand new deal coming out of construction. The construction loan, the variable rate, climbed through the roof, and the seller needed to sell. And we had raised enough money in our fund that we could close it without Gabe. Again, I said, all right, Gabe, let's go do this again. This time he went out and raised $2 million. And so he has 20% of a brand new 2023 built 102 unit deal in St. Pete. Right? You see what's happening here? Because he was willing to solve a problem I had, and that was basically he found deals for me and is willing to do the work. I solved the problem that he had. Remember, I'm his Gary, right? I had a Gary back then. He has a Gary now. So now he's done 4 deals, 2 with me, 2 without me. This 25-year-old has $50 million worth of real estate. That's how that's how these relationships go. And it's funny because, there was a point where everybody says, your network is your net worth, all these cool little sayings, right? And I despise them most of the time, but the reality of it is this business is about relationships. I got my real scale start because of a relationship. I feel like we've probably changed his life in a really big way. And, we have those 2 deals together. We're going to make a ton of money on both of those deals.
That's fantastic. I love that. So basically what we're doing is, we're opening up an opportunity for everybody who wants to go out and do that work to reach out to you, Ken, and become the next Gabe for you.
Yeah, I would love that, right? Remember how it helps me, because the more people I have out there looking for deals from us in markets that we want to be in, that means I'm not out there looking for deals. You see how they're solving a problem for me? You see that? And I'm solving the problem for them.
That's super fantastic. Well, I know we probably need to have you come back and do a part 2 to this, but for those who want to know more about how to connect with you, where would you send them?
Yeah, go to kripartners.com. So kripartners.com. When you get to our website, you're going to kind of go left or right, right? Left is if you want to go down the education side of our business and do your own deals. Or if you're like, no, I don't want to do any work. Just here's my money. You go do all the work and you make them, just pay me when you're done. So either side, it doesn't matter. Our goal is to help people create wealth through real estate. So kripartners.com, easiest way to find us.
Ken, amazing story. Thank you for inspiring our tribe who are on the same path to get to financial freedom. Tribe, if you got value today, if you'll please do us a favor, rate and review the show. Maybe even just take a screenshot of this particular episode and tag us on social so we know that this is the type of stuff that's going to help you break free and get to financial freedom as fast as possible. As always, have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.